y'all did the other day on cash flow. I want us to look at it. Clayton's not here. Clayton's not here. So I know where John's here. Had a lot of different answers on that problem, so let's go ahead and look at it. What number is that one, Jonathan? Exercise what?
16.5.
I thought we turned in 16.6.
Whatever that one is, honey, I don't
Yeah, it
know.
might be 16.6.
The 16.6?
We did them both.
Yeah. All right, let's look at that one. I haven't even turned to it in the book, but it's exercise 6. And let's see what you did wrong. You need to practice these because you know you're going to have one on test. So I'd like to gear you up for it. Was this it, 5? It was 5?
I didn't we did that one as like
No, the one I just gave you back. Which one is it?
It's 5 and 6, but I think we had to do 6 and turn it
All right, let's do that 5 and 6 on the same sheet. Okay, this was number 5 with your net income, add depreciation, accounts receivable increase, so that's a minus. Inventory decreased, that's a plus. You got money from inventory. Prepaid expenses decreased, so you're using something that you'd paid out cash for a year ago or whatever. Increase in accounts payable, that's the same as borrowing money, that's a plus. Decrease in wages payable, it means you're paying some of your wages payable, and that's a minus. And the answer was 103,850. Now on number 6, how many of you got 263.50? Anybody get that? 283, 260, 850. This paper got it. That's Greg Cornell. Is Greg the only one that got it? Y'all didn't get that? You got it? You got it?
Greg and I work together.
Okay, Greg got it. You didn't get it, Cole?
All right.
You did? All right. Okay, then all of you in here got this one then. Okay, so take your net income, add your depreciation of 96, decrease in accounts receivable is a plus, increase in inventories is a minus. You're putting money in out for inventory. A decrease in prepaid is a plus. A decrease in accounts payable is a minus. You're paying your bills. Increase in salaries payable is a plus. You're borrowing money even from your employees. And the answer was 263.50. And that's where we were. That is the operational part of a cash flow statement. Indirect method. Okay. Now, what was your assignment for today? A bunch of them. Jonathan, what exercises? Cole, you got them down handy?
1 second. It was 7, 9, 11, 16, 17.
16, 17? Oh, that's about 20 minutes of homework. Okay. All right. I had a young man yesterday, I've never had this before. He came to one of my classes in the fall. He was absent a lot. When he did come to class, he'd just sit there, didn't participate, didn't have his homework too often, and if he did, he told me he copied it off Moodle. And he just now found out that he failed the class. I dropped a low grade in that class, and he still had 51 average. And he even went to my boss and asked her to try to make me change his grade to a D. He come and begged me, "Will you promise me Christmas?" And I said, "I don't promise grade for Christmas present. It's what you made, it's what you earned." And anyway, he tried to argue with me that his average was 58. There's no way, 51 is your average. Now, you had no bonus points for attendance, missed so much. But if you had 5 bonus points on every test, that only gives you 5 more points. That'd be a 56 average. So, fact is, he don't know anything about that class. He needs to repeat it. But anyway, I've never had a student. That was a first. In 50 years. All right. Never had a student to big like that. Sort of felt sorry for her. All right. Now, Jonathan, you wouldn't beg for a grade, would you? You wouldn't think Cole wouldn't even beg for a grade. None of you all in here would beg for a grade. If you don't make it, you don't make it. Okay, so let's look at some of these exercises, starting with exercise 7 on page 801. We need to get through this chapter and get to another. Cash flow from operating activities, indirect method. Now, the biggest thing on there, the only change I see is you had dividends and you had, come in, guys.
Did I leave my calculator here in that room the other day when I was taking my test?
Because I don't know if I didn't even check.
Okay.
But now, Anthony, if somebody's honest enough and you left it in there, they would have turned it into the secretary.
Okay.
So check with Michelle after
Okay.
class. I hope somebody was honest enough. Okay? Not extra credit, I just had you all for practice. All right, so let's look at number 7. I'll give you extra credit somewhere down the road. Now, the only thing different on extra 7 here, you take that income, you add depreciation, but what do you do with this gain? What do you do with it? Minus. Why? Because it's already up here in net income 1 time and will be under investment 2 times. So we've got to take it out 1 time. Okay? All right, increase in accounts receivable, people borrowing our money. We bought inventory. We sold inventory, that's a plus. We used some of our prepaid, that's a plus. Decrease in accounts payable, paid our bills, a minus. We owe IRS or somebody, so that's a plus. So what 2 things did you have on here? Gains. Now you had dividends in this problem. Dividends don't go here, does it? Dividends goes under financing. Now, we'll read this. The change in dividends will be used to adjust dividends declared and obtain the cash paid for dividends and financing activities. And then cash flow from operating reports the cash flow in and out from a company's day-to-day operation. You know, accounts receivable and inventory and accounts payable, all these are day-to-day operations. All right, that was number 7. Now, number 9, On page 802, reporting changes in equipment on a statement of financial cash flow. Okay. Monique, do you have that answer, dear?
That's $16,875.
Well, it might be. I don't know. All right. Cash flow from investing activities is 105,000. And where'd that come from? Analysis of the general ledger indicates the office equipment which cost 202 and which accumulated depreciation total 84 on the date of sale was sold for 101,250. That is your money you got. All right, the money you got is what you put down on investing. Okay, this is pre-registration time. Greg, who's your advisor?
Let's see.
All right, how about yours? Have you all signed up on the door schedule?
Not yet. Yeah. When's the last day?
Next week.
This week. Yes.
Yeah, put one inside one, store. Who's your advisor?
Yeah.
I'm Missouri. Sign up. Okay. And you get 5 point bonus on low test rate if you're pre-registered.
Okay.
Okay? Don't know who your advisor is, I want you to pre-register. And Cole, I want you to pre-register too, no matter where you go next year. The pre-register don't cost you anything, does it? It don't cost to pre-register. Nobody's gonna charge you unless you come back. All right, and you might just happen to decide to come back. Nobody else might not want you but us. All right. But basically, though, we have registration right on up to the 15th of August. But pre-registration, that helps the college and the different schools to plan on classes that they may have to drop or open another section or whatever. So it helps us plan, and we need planning, that's for sure. Any question? Exercise 9, investing activities. All right, on to number 11, reporting land transaction on a statement of cash flow. Now look at that land. You had 868,000. Now we purchased land for how much? How much we pay for that land?
104,300.
All right, and how much we sell land for?
36,840.
How much?
Oh, I'm sorry, I lied. 95,550.
Right. You see two things there that involve cash. One going and one coming. That's all cash flow is. It doesn't matter what the land cost us. All right. It doesn't matter what accumulated depreciation is, which you don't have on land anyway. Cash from sale of land, 95,550. Cash used for purchase of land, 104,300. Your net there is, they didn't give it to us, but your net is how much? Somebody subtract these two. 9,000 something. All right, somebody, 9,000, 8,000. I got the bad pen this morning. This thing's not going to run. 8,750. Now, what do we do with that gain? Now, this land on the books was 60-some thousand, right? So on the books, subtract 60-some thousand from 95, and you got a gain. What do we do with that gain? You had it in this last little problem. We add it under operating, don't we? Okay, but you see, the gain is right here. The gain is reported once. it's in net income. It's reported twice. That's why we take it out of operating once, so we won't be double counting. Okay. All right, now we're moving on to exercise. Well, we might need to do another one here. That was exercise 11. All right. Take a minute and see what you can do with number 12. You're out there viewing today. Also, take a minute and see what you do. And I hope everybody participates. You don't learn unless you participate, do homework, and attend class, and read the chapter and study. Then you come up at the end of the semester. What can I do to get extra credit to get a D? Take a minute.
That's what I should. That's much.
Yeah, no, right?
What we're doing is little parts, operating, investing, and now number 12 is financing. Number 12, look over those accounts. Where do we get money from? We sold some stock for cash, $1.2 million. We paid out a dividend of 176. That's a minus. Paid in capital. That would be cash too. Stock dividend is not cash. Net income, retained earnings, that's reported under operating. All right. Number 12, you've had time to read it, at least think about it. So let's look at now cash from the sale of common stock. Where do you think that 1,920,000 come from? Okay, take your 1,200,000. That's what you credit common stock for. You got cash. Now add to that 720,000 that was paid in capital. Both of those together is your cash amount. So when you add those two together, do you get 1,920,000? That's the cash you got from selling stock. Now here is the dividends you paid. All right. So your net cash flow from financing is the difference. And if you subtract, what do we get there? How much is this? 1 million? What? 1 million? $1 million what?
1,456,800.
What's wrong with this pen? 1,456,800. Can't read it, you can hear it. Okay. Now, if you buy land, all right, if you bought land $1 million. Hey, my pen's starting to write better. It's like there's a little. If you bought land for $1 million and you paid $200,000 down, and you got a mortgage for $800,000. How much cash flow is involved? You bought land for $1 million, you paid $200,000 down, mortgage is $800,000. How much cash flow is involved? I'm gonna repeat that. You bought land for $1 million, you paid out $200,000 in cash, you got a mortgage for $8. Now, how much cash was involved? How much? $200,000. So that's the only number. Be working that next exercise.
Can't see. You can't see. Yeah, Chris is the thing. I swear. Yeah, like she was basically like soccer student. Say Chris was gonna be there like yeah. But no, the thing is, one of the pronounced C-A-R. S-C-A-R. He's like, I got an S-C-A-R. A score? She's like, no, an S-C-A-R. I guess it's monkey. She came in I was like, it's like you can get your head together. I've never done like that. It was about this friendly. I'll take it. Nice one up. That's what it is. Yeah, she goes up.
Cherry picker. She let her ship and drop. And then Richie moved out there. I didn't know.
It says balance and purchase for cat house is balance. That's looks good to me.
It's like half.
She got part of long-term mortgage, no? No?
It's just.
Oh, wait, this is. Sold, this is purchase.
She calls, she ended up.
No better.
in like September, the one I had the same.
Wait, actually,
Okay, so it's, there's a dog, and then that's mine.
teachers like.
Like, she didn't even think that okay, this is
Sitting in front.
and it's like, you know that shirt? Yeah.
Was it? Yeah, those people that
She's from the shit.
Sorry about that. I have to be Dr. Burko's psychiatrist once in a while. So I have to be Dr. Burko's psychiatrist once in a while. Help him out. No. Anyway, guys, come on. Remember, only cash for a mortgage. Now, I asked you to look at the next one, number 13, reporting land acquisition for cash and mortgage. All right, you bought land, purchase for cash, $246,000. Purchase with a mortgage, $324,000. Now, only one of those goes on cash flow. Which one? Which one goes on cash flow? Cash. The cash you paid out. The mortgage is somewhere else, okay? All right, you'll get bits and pieces of all three sections. But section 1 is the hardest, operating. All right. Now, I also gave you number 16, cash flow from operating activities, indirect method. Now, this is the same thing. I don't think there's anything new in it. All right. Jonathan, do you have an answer for number 16? First off, number 14, cash from issued bonds, and we paid out cash to redeem bonds. But we're down on number 16, which is operating again. And what was your answer? 58,020? All right. 58,020, of course, is correct. You've got net income. You add depreciation. A gain, we minus. Don't ever forget that. And a loss, we plus. Other items involving non-cash expenses, plus changes in liabilities. I'll have to look and see what that is. Increase in accounts receivable, tying up money, decrease in inventory, receive money, paid out more money for prepaid, and we paid out some on our liability. There's no tricks here, but let's look at that 1383 on number 16. It just says income statement data, other items involving non-cash expenses, and that is an increase evidently of 1383. All right, did you have number 17? You had 17, didn't you? All right, now I want you to look at number 17. Everybody look at number 17 and take the difference in your cash from December 1 to December 2. What is the difference between 183 and 14? Subtract 14 from 183. Somebody do that. How much? All right, those three numbers will be the last three answers on your statement. Those three numbers are your check figures. Those three numbers are your answers. If you don't get those three numbers at the bottom, go back and do something right that you must have done wrong. Now, let's look at this because I'm going to ask you to prepare a statement before the end of class today. Now, number 17, Cole, did you get $38? All right. You take net income again. You add depreciation. You subtract that gain, your liabilities, and assets, increase in accounts receivable, a minus, increase in inventory, a minus, increase in accounts payable, a plus. All right. Now, what happened with investing activities? Part 2. We sold land for 120. We purchased equipment for 30. The difference is 90. Investing is usually easy. Don't mess up on that part. Now, cash flow from financing. You sold common stock, 60. You paid dividends, 19. The difference is 41. So now here's those 3 answers I told you about. This is your cash at the end of the year. This is your cash at the beginning of the year. And this was your answer, the difference between the cash. So you have these 3 answers given. Use them as check figures on any problem, on any test. All right, that's what this chapter is all about. Cash flow statement. What it's all about. And we're going to finish this chapter Tuesday, and we're going to start chapter 17. All right. Now you're going to have a test on 15, 16, 17. Okay. So these last 2 tests are on 3 chapters apiece. So you need to keep up. Now your assignment. All right, for Tuesday, I want you to do problem 1, 2, 3. Those are all cash flow statements. The indirect method. Now, I'm going to show you the direct method, but it will not be on a test. I'm not going to give you homework on the direct method, but I will show it to you Tuesday. So here's what we're going to do Tuesday, 1, 2, and 3A. And I want you to read chapter 17. All right. I'm going to give you a cash flow statement to do at the end of the period, but right now we're going to look at chapter 17 briefly. All right, let me take a minute and bring up a PowerPoint here. I'm just going to spend about 10 minutes on this chapter. Now, on this next test, chapter 15, 16, 17. Okay, and this is financial statement analysis. And real quickly, we have common size statements. We compare, but on this chapter, chapter 17, I'm going to let you use a page of ratios. I think it's ratios, yeah. look at page 848. Page 848. All right. You're going to be able to Xerox that page to use on your test.
So we're gonna be at what?
Page 848. Do not tear it out of your book in case you sell it as a used book. All right. You can copy. You can handwrite it or Xerox it. Copy used to be called Xerox it. Yeah, Xerox it. It's an old term, I guess, for copying something. All right. These ratios you've been doing along the way. I want to show you a couple here. You've had these three ratios: working capital, current assets minus current liability; current ratio, current assets over current liability; asset test ratio or quick ratio, same thing. Your current assets minus inventory over current liability. Sometimes some books take out prepaid items also, but we'll see what this book does. So you can have these formulas copied. Here's your formula for the current ratio. Here's the quick asset formula. Working capital is just, now we got accounts receivable turnover. I believe we had that one before. You want this to be a big number or a little number? If you had a business, you got accounts receivable. You want your turnover to be big or little? What if it was 1? How many times would your accounts receivable turn over? Every 360 days? What if it was 10? You'll be collecting every 36 days, 10 into 360. What if it was 20? You'll be collecting every 18 days. So bigger is better, isn't it? Basketball, big score is better. Okay? In golf, is the big score better? Okay. Speaking of basketball, you guys watch the women in Notre Dame?
Yeah.
That one
girl, she
won both of those games, did she?
Yeah, that's crazy.
Yeah, beat usually a team, the women's team, they play for second place in the nation because they know Connecticut's going to be first place.
Yeah.
So that's a big upset. And I guess West Virginia boys played as good as they could. Virginia boys were a dud. All right, so this is the deal. We're going to study this chapter on Tuesday. But the deal for the rest of the period, which I want handed in before you leave, is exercise 17, I think. Go back to 16. No, it's exercise 18. Now, look at exercise 18. You got it in your workbook. I want you to work it and turn it in.
Chapter 16, your exercise 18.
Chapter 16, exercise 18.
Should we turn this in?
Huh?
Turn this in?
Yeah, you're going to turn it in before the period ends. Now, the best thing about problem 18, I want you to have these three bottom answers before you turn it in. All right, it's already there. It's in the book. But are there mistakes there?
Which one we going?
Did we go over those mistakes?
Chapter 6.
We went over some of them.
You said like list of mistakes or just
No. I just want you to do a corrected statement. You do not have to list them this day.
Should we make it?
All right. This is not her, just like, I don't have to list it. You got a report? You don't have a work book? You have a work book? Okay. Work together on it, that's okay. Let's have 7 correct answers today. Goes up there on the 3 answers.
I'm just getting every line of this. I don't exactly how it's usually broken off. That's how it may No, I think it's like what gets added. So if you get a game on sale, the movie If you ever at her house, I'll be able to remember. Is our increase in inventory twice? Just decreases. Give me a second.
Should have.
It confused me. I thought I had the same number.
I'm 36.
Yeah, I was like, what?
Oh, maybe he'll drop it. Wait, what?
Just looking for
You got 20. Just bits. Right on the right.
You should I never said it for I've never seen that before.
Is that around?
Yeah. Thank you. So did you add all the top stuff and see what was?
We had 386.
386.
I have it memorized. Increase, decrease. I said it.
Oh, I was.
But really, I'm looking back at this.
You have to. I'm gonna put at operating and the fund.
That's
She could have had.
Remember you did this.
Oh, she's coming in. Dude, that's good.
Catch, so that's the bad. Yeah. Purchase. Just use your job. See, I think it's real.
Your book. Your book, not mine. My whole son.
Shit.
No, you know, you don't get on my book, my own. Get on my book, you smile, you hold back. Increase. People louder. Talking to him outside of class. Yeah, well, a little bit.
Jonathan, did you already get the net cash flow for the operating activities?
Yeah,
What'd you get?
386, 160.
That's what I said. But it's already on 360. That's what
I just got me smell food. Hey, Georgia. Come on in, George. No, there's a job. Yeah. You just get with the other life. I don't know how long it will take. I'll have to talk to some of the employers. And how much time I'll start to wait. Yeah. Like 10 minutes. Yeah, sure. How we doing, John? That's one man. Good. Good. Now you're ready to go? Good man. Okay, Monique got to work out, folks. I don't have time to deal with it today. My boss. I don't have time.
Now, on number 18, do you have 381, 360 for operating? 381, 360 for operating. You got that? You all have that, John?
No, I added the.
Oh, decrease in expenses? Hey, you're paying some bills, that's money out.
So we did not. It's the why we put some drink. I don't know. I guess. Dude, we're gonna get It's a safe, there's nothing. Sorry, we all, okay, gotta have this. Let's see how she did it. We have the same numbers ever. Then I don't know how she did that. If we get one, fuck it. Do you have syndrome? That was you. We copied that out of the book. Fuck, we have syndrome. That's what it is. What? That's what was wrong with the book. Oh, it's fucking subtraction. You gotta do that. Add and subtract. You fucking know.
Yeah.
Say it.
That's funny.
Yeah.
Look, my name on this.
Yeah.
Yeah, you don't want your drawer.
She said Karen, she wants to come in tomorrow, you know. He's usually here about 5 minutes early. Oh, okay.
I didn't see you here with this.
Huh. This thing has lost my where I set up for my class today. I had two of them in there. Ooh. Never done that before. My accounting. Wow. Better set one up real quick. Now they're showing up. That's crazy.